In this video, we're going to go over the basics to day trading. We're going to talk about everything that I know now that I wish I knew when I first got started 6 months ago, because it would have saved me a lot of money. I would have taken a lot less losses if what I know now I knew before. We're going to talk about leverage shares. We're going to talk about options, right? Call options, put options, selling contracts. We're going to talk about the indicators that I find successful. We're going to talk about the data that I use as well. We're going to go over literally everything in this video. You just have to keep up with me. Let's get started. The first thing that you're going to need when you get started with day trading is some money. And look at that! We just happened to find a crisp Benjamin right there. We are going to take this Benjamin and we are going to convert it into Robinhood. Yes, Robinhood is one of the easiest brokerages that any person can start with, right? And you can choose any of them you want. For this specific video, we're just going to focus on Robinhood because I think that's where most beginners start. I don't think most people are going to be starting with Charles Schwab or Fidelity or Webull. Those are options, yes, but Robinhood is just super easy. You type in a few things, address, social. This isn't available everywhere, right? Maybe in Canada you're not going to be able to do this or some other country, but if you're in America, man, we're using Robinhood for this video. Before we dive into Robinhood, we want to ask ourselves, what is our actual goal? We have $100, right? We earned this $100. We don't want somebody else. We don't want somebody else's hand grabbing this $100. Now we ain't got no money, right? Because that can happen. If you are wanting to be a day trader, it is very possible that somebody takes this money out of your hands. We don't want that to happen. So what do? We set goals, right? We have $100. We want to try to make 200. We want to double our money. That's a good goal, right? Doubling your money. Maybe in a casino, it would be a little bit easier than the stock market because you just have to click a button or go on a blackjack table, but still, we can make that happen. Or you just want to grow it slowly. First thing we're going to talk about, if you want to be a day trader, let's talk about leveraged shares. Right? What is a leveraged share? Let's go ahead and take Tesla as an example. Right now, Tesla is trading at $345.52. We don't have $345. We have $100. So I can't really trade this. I could buy an option on it. If you click trade options, and we go to the closest expiration, which is June 6th, right? This is when these contracts expire. Now let me go real quick through this, right? If you want to buy a call, that means that you think that the stock price is going to move up. As the stock price, as Tesla moves up in price, these contracts will gain value, right? So right now there's a bid of $10.35 and an ask of $10.50. What that means is this contract costs $1,035 right now. We don't have that. And if you want to go really far out the money and you only have $100, you have to buy a $400 call, meaning that you are expecting Tesla to skyrocket up, which is possible, but very unlikely. And vice versa with the puts. Let's say we go all the way back down and we say we think that Tesla is going to go down. Well, again, we only have $100. We have to go all the way down. Look how far I'm scrolling down here to a $305 put. Do you think Tesla is going to fall to $305? I don't. I mean, if you're asking me, I don't think it will. I think it's a very manipulated stock. I don't think it's going to do that. It fluctuates, but I don't think it's going to fluctuate that much unless there's some crazy news out there. So what's our option? We could buy the stock, yes. Let's go ahead and click back here. Let's go to search and let's look up something called TSLL. And what is that? Click it. Directional Shares ETF Trust Daily Tesla Bull 2X shares. What that is, it's basically leveraged shares, right? And look how much these cost. $14.87. So you can go to trade, buy, and just how many shares can you buy? 5, 6? Let's say 7. No, you can buy 6 shares of a leveraged Tesla thing, share, leverage, whatever. You can buy 6 shares of this, and what happens is the share will move, right? The share TSLL, what this is, it will move, but it's not like a contract where if it goes against you, you lose all of your money, right? Because when you're playing options, when that contract expires and it's not anywhere near your strike price, near your contract expiration price, it goes to zero. And you can sell it earlier. Yes, a lot of people do choose to do that, but if you're a beginner, I would recommend leveraged shares. You will save yourself a lot of money and you will learn the markets, because what you're trying to do is you're trying to make this $100 go as far as you can. You don't want to buy one contract super far out of the money and then it expires worthless and you lose it all. No, we play with leveraged shares. There's leveraged, I believe, Apple, there's leveraged Nvidia, leveraged Tesla. There's a bunch of these that you can choose from, and you'll save yourself a lot of money and hopefully make a lot of money if you buy these shares and the price moves in your direction. Now, one thing that I do want to mention is these leveraged shares also have an options chain, and look how much cheaper they are. Instead of paying $1,000 at the money, the at the money $15 put is only $100. I believe that is the ask. So you can actually bid maybe $99, maybe $98, and it feels now you saved yourself $2 and you're playing the market. I think this is a lot better for beginners than playing the actual shares, because I'm going to tell you guys right now, these actual shares like Apple, Nvidia, whatever, Tesla, what else do we got? What's that one thing that people watch? Netflix. Their contracts are very expensive, and if you're a beginner, believe me, you don't want to be putting down $1,000, $2,000 into something that you don't know what you're doing. Practicing this way with leverage shares and leverage options can save you a lot of money. And now that we went through the most basic things, how are we actually going to trade? How are we actually going to move this money around? Well, you definitely do not want to just be trading on your phone, looking at a line, looking at candlesticks on your phone, because it's too small and you don't really get indicators. I know Robinhood on their mobile app, you can see a couple of them, but it's so tiny, you're not going to be able to see anything. And that's why I have my MacBook open with Robinhood Legend. Yes, if you have the Robinhood app on your phone, you can also use Robinhood Legend, which is a desktop trading platform. And look how much bigger it is. You can zoom in onto it. You can zoom out. You can see these indicators down here. Let me go ahead and switch it over to here, and I'm going to show you guys every indicator that I use that I have been successful with. And here we are, guys. We are on Robinhood Legend right now. We are now looking at the S&P 500 or SPY, and you can choose any stock you want. Look at this. You can look at Tesla, Apple, Nvidia, Amazon, Microsoft, Ford, every stock that is out there, you can look it up. You can look at crypto as well. You care about Avalanche? Sure, look it up. Look at what it's doing. It's all 24 hours as well. It moves. It's not the best with crypto, I will say, but I want to focus right now on stocks, right? I want to look at ETFs. I want to look at Tesla, Apple. I want to look at these stocks. I want to show you guys the indicators, right? That's the most important thing. Also, yeah, just look at it. Isn't this beautiful? I know a lot of people don't really like Legend. They use TradingView and these other ones. I think that if you're a beginner, you really can't go wrong with Legend because it's free. You pay $0. You have all of these tools at your disposal right here. When we click this F, look at that, indicators. I have a couple of these right now. I have preset ones right here. It's free. That's the biggest thing you got to know. If you can get into trading for free, get it, right? You don't got to pay for everything. You don't got to, then we're not selling no course here, guys. I'm showing you guys everything that you can do for free. The only money that you need is the money to actually trade with. So let's go over the indicators, right? What do we got right down here? RSI. RSI basically tells you how much a stock is overbought or oversold. So down here, look at how the stock price, look at how or the SPY went down, right? Was just going down, going down, going down. You notice that the stock is oversold. And it shows you with this red right here, the stock, it doesn't want to be oversold, right? Stocks don't want to be oversold. They don't want to be overbought. They want to be in this blue range right here, right? They want to be comfortable. So when it veers off down like this, and it does it strongly, like this was a strong dump right here, it wants to come back up, which it did. I actually made an entry right down here and I rode this wave up. I made some money on that because of the RSI. The next thing under that is the MACD, aka the MACD. I have it on the standard settings, and a lot of times I don't really use the MACD unless it's a volatile market. If we zoom out from here, this doesn't really look too volatile, right? It went down a little bit, it went up, stayed flat. I have a little bit of a trend line right there. Don't worry about that. Remove that. But you can see it wasn't really volatile until this happened here. And if we go back, look at what happened, right? The blue line is bullish. The orange line is bearish, right? So when the blue line crosses the orange line, it signals that there's a shift in momentum and buyers are starting to pick up the pace. But the issue is here, look where it flipped. It flipped right in this candle. So if you would have bought a call, which means I think the market will go up, you had an extremely thin margin of profit there because sure, it did go up a little bit and then it came right back down because it wasn't really volatile. You can see how it flattened out, went up a little bit, flattened out, and you can see it with the MACD, right? How many times it shifts and turns and crosses over on each other. It's a lot of times very hard to gauge. But if you're in a volatile market, which under Trump, we are in a volatile market. You never know what this man is going to say. You never know what his press secretary is going to say. Elon Musk can move the market. Whoever, Jerome Powell, tariffs, inflation, I don't care, consumer price sentiment, whatever. There's a lot of things that can move the market, which is why I keep the MACD there. It's a just in case thing. I would go over now all of the data that I use. I will say I use quant data for a lot of my trades, but that costs $50. And that needs its own separate video because there's so many things. There's so many different pieces of data that you need to look at. Things like gamma exposure, right? What contracts are the most expensive? What contracts are other people buying, right? Because if let's imagine you're buying a stock right now and you're the only person buying calls, but there is 5,000 people buying puts. Do you think that the market is going to go up because you have your one call versus these 5,000 people who think the market's going to go down? That's what gamma exposure is. So you need to see that, which is not shown on Legend. There is delta exposure on quant data. That tells you how much money is at every specific contract or at every specific price, which correlates to every contract, every price. It's the same thing, but delta is on there. There's Vanna. There's a lot of things that I would have to go over in a different video, or else this one would be way too long for a beginner and way too it wouldn't be understandable. One of the things that I did use way back in the day when I first started trading was something called the Money Flow Index, or MFI for short. But the thing with it is it pretty much just copies what the RSI is. It takes like one extra thing into consideration, but it pretty much shows the same thing, right? We go back to that one dump that we had, and this was just the last trading day on Friday, last Friday, at least it was May 30th, right? So you can see both of them dumped under, came back up, but look at the difference between the Money Flow Index and the RSI. The RSI stayed low with the market. The market did stay low, but the Money Flow Index said that money was flowing in at this time. So if you were listening to that, you probably lost money if you bought calls. If you bet that the market was going to go up because this line was pointed up, yeah, you lost money. And then it did it again down here, but this time it was right. But it was right because it also correlated with the RSI. So that's one thing that I used to look for is, do these two correlate? If this is going down or going flat, but this is going up, I would not be bullish in that situation. But if this was going up and this was going up, oh, I'm buying calls, man. And sometimes you could still lose, but you can lose anytime. You can't be right when you're day trading all of the time. It is not possible. You will take losses when you get into day trading. But what you can do is you can minimize the amount of losses that you take. For instance, let's say you are in a $100 play. You don't want to lose the full 100. Let's say you bought a put, down here. You thought that the market was going to continue going down. Do you just hold that put all the way until you lose the $100? No. You say, okay, it's continuing to go down. A lot of bearish indicators are coming up. I don't think this is going to come back up. Let me just take a small loss. Let me take a 20% loss. That is pretty much my threshold. If I am playing and it's going the opposite way of me, if I get down 20%, I'm done. I don't want to be in it any more than that because I'm playing with a little bit of extra money. I'm putting $1,000 into some of these plays. 20% of that is 200, but I lost 200, right? Imagine if the market kept going down. Imagine if it just kept, some bad news came out. Trump said something that I didn't know, and the market just continued to flush. I would have been down $1,000, but I saved myself $800 for the next play. So let's go ahead and do a quick recap of everything that we've mentioned in this video. The number one thing you're going to need is a brokerage. I recommend Robinhood. The second thing you're going to need is some money. I would say $100, because if you lose $100, it is not the end of the world. It is not life-changing money. Do not put in, if you are a new trader, $1,000 or $5,000 or $10,000. Please don't do that. Start off with $100. And then if you are starting off, like I said, it would be a good idea to start off with leveraged shares, right? TSLL, NVDL, these are leveraged shares. They cost a lot less money. The options also cost a lot less money. So you are probably going to lose less, right? You're not going to lose more money, especially with only $100. You really have to buy out of the money contracts if you're going to actually play the big boys like Tesla or Apple or whatever like that, right? So we went over leveraged shares. We went over the contracts. If you're buying a call, that means that you think the stock price is going to go up. So you buy that contract and hope for the best, right? You hope that the stock price doesn't go down. Vice versa, if you buy a put, you think that the stock price is going to go down. And if it goes up, then you're screwed. But if it goes down, then that contract gains more money. We went over Robinhood Legend, which is what I still use to this day. I don't pay for TradingView. I don't pay for any of that. Why pay for it when Robinhood is consistently updating Legend to be better, and it's going to be as good as TradingView eventually? So we went over that. We went over the couple of the indicators that I use. The only thing we did not go over is this, which is quant data, and it is a lot of data. This is probably an hour or 2 hours worth of information that I will be making in a separate video for anyone that is interested in buying this. If there is anything that I missed in this video, please let me know down below in the comments, and I will be more than happy to answer it. Also, I do live streams every single day for the entire session, the entire New York session. I am live streaming, going over all of my trades. I do them live. I keep nothing hidden from you guys. There's no paywall. I'm not asking for any money from anybody. I do everything for free because I want other people to be successful and make more money, right? Times are getting tough out here, man. Jobs are not paying as much as they used to, and now AI is coming in and taking a bunch of jobs. So if you can have a supreme skill like day trading, or even swing trading for that matter, we'll go over that in a separate video, it'll be beneficial. It's beneficial. It's always beneficial to learn something new. It's never a bad idea to learn something new. So if I missed anything, let me know down below. Hopefully you enjoyed it, and I'll see you guys in the next one.